What's going on, YouTube? We're going to be doing another quick financial analysis. Today we're going to be looking at the one, the only Tesla. All right, let's dive on into this. First and foremost, we're going to be looking at the income statement. First thing we're going to be looking at is their revenue. Let me change this to billions real quick. All right, with the revenue, we do want to make sure the revenue is increasing year over year. That is something big that we want to look into to see if this is a company we want to buy. And as you can see, back in 2016, they had $7 billion in revenue. Last 12 months, they've gone up to $41 billion, so that is fantastic. Next thing we're going to be looking at is gross margins. We want basically this to be within industry standard or better, and 22% is very high for automobile companies, so that's fantastic. Next thing, we're going to scroll on down to net income once again. We want this number increasing year over year. 5 years ago, they had a net loss of $600 million, and last 12 months, they've posted $2.18 billion. So that has been increasing, which is fantastic. Next, we're going to move over to the balance sheet. Here, the main thing we're looking at is to see if they have more assets than they do liabilities. And we're going to look at the last 12 months here. They have $55 billion in total assets, basically $29 billion in total liabilities, so they do have more assets than liabilities. Basically what this means is if they liquidated their entire company, they would have more than enough money plus some to pay off all their debts, which is fantastic. And last thing on the balance sheet we're going to look at is the total shares outstanding. We can see that this has actually been increasing, well, a small increase year over year. It's still an increase. Basically, as shares increase, it's diluting your position, which isn't necessarily a good thing. It is a very small increase, and it looks like they're mainly doing that to raise capital, which can be understandable for a growing company like Tesla. All right, moving over to the cash flow statement. Main thing we want to look at here is the cash from operations. And once again, we want to make sure this number is increasing year over year. Back in 2016, they had a loss of $120 million. And then all the way to the last 12 months, they have $9.18 billion. So that has increased quite a lot, which is fantastic. And then we're going to scroll on up. We're going to be looking at an evaluation metric. I like to look at market cap to free cash flow to see what the multiple is. And geez Louise, we are paying 175 times free cash flow. So that is a large premium to say the least. I tend to think of myself as a value investor, so that is not a value play for me. Those that might be a little bit more speculative and understand Tesla's growth pattern, they do have a lot of good positive things in their favor: growing revenues, growing cash flow, which is all wonderful. They have really good margins, and those are definitely things to take into consideration when you're looking at buying Tesla. All right, that's going to do it for this evening. Thanks for watching. Have a good night.